welcome. You're watching The Money Show. I'm Kavita Thapliyal, and today the highlight of the show is our viewer queries because it's the only show where we do your life financial planning. You might be getting a lot of investment instrument options and strategies from a lot of places, but this is the only place where we have you connected with our expert who look into your portfolio, who goes deep into your portfolio and gives you strategy for each of your financial goals. And today is that kind of a show. All you have to do is, if in case want to ask us any queries, you can send across your question on our WhatsApp number. We'll be flashing that on your screen. We also have an email ID where you can reach out. The WhatsApp number is 865-797-4571. And the email ID is themoneyshow@etnow.tv. And the only show where we help you plan your financial goals. We look at your mutual fund strategies in case any questions on insurance or any loan repayment strategy that you might want from our experts. We help you with all of that. And today the guest on the show who's going to do your life financial planning is Nisreen Mamaji, CFP, MoneyWorks Financial Services. Nisreen, hi, good evening and welcome to the show. Our focus is on viewer queries today with you, and let's take Pankaj's question first. Pankaj, he says that he's 38 years old. He's been investing in a couple of funds. He's got Quant Small Cap, Nippon Small Cap, Tata Small Cap, all small caps. Oh my God. Motilal Small Cap, Bandhan, Motilal Mid Cap, Edelweiss Mid Cap, Parag Parikh Flexi Cap. 27,500 was the SIP amount, 10% step up every year, and especially when market is down, he plans to do a lump sum investment. The portfolio is almost 1 year and few months old, and 5.41 lakh is the current portfolio value. Target is 12 years, 1.25 CR, and he's a government employee, but these mutual funds are under his wife's name. Will there be any issues in ITR filing? Pankaj, I don't have you on the phone line because I really want you to know why so much of love for small caps. I mean, I want to know the kind of return also that you've been getting from each of these funds. So, strategy-wise, Nisreen, first thing first, cut out the small cap exposure. Get more balanced and diversified, definitely. But look at the choice of small caps also. I think he's got the top 5 categories all in his portfolio, thinking that this will just boost up his returns, but at the same time increase his risk. Nisreen, having said that, the small cap universe for a fund manager is very huge. So, just for our viewers' understanding, Nisreen, is there any strategy or philosophy clash in terms of these small cap funds, or you think the fund managers of these particular funds have different strategies, considering small cap is a larger universe from where fund managers can pick up and choose and have a theme for themselves in their portfolio?
So, you're right in that sense that anything above 250, in the market capitalization ratings in the valuations. So typically the way, that we go is from number 1 to 100 in market cap is considered as large cap. Between 100 to 250 is considered mid cap, and anything above 250 is considered small cap. So yes, to some extent that you are right that, the universe is very large. But usually there will be some amount of stock duplication in the funds that Pankaj has selected. So yes, I mean, by having, sort of very skewed towards a small cap kind of a portfolio, it's not that he has got diversification. In fact, there will be some amount of duplication also. So basically the suggestion is that, there's too much exposure to small cap. 19,000 out of 27,500 SIP, that is nearly 69 to 70% is going towards his small cap investment only. So that is too risky. Even with a 12-year horizon, one would consider that you should be about 6,000 rupees in mid cap, and flexi cap should be about 2,500 rupees. So one would like to make a note that, there is to be a suggested or a recommended portfolio as follows. You can note it down. Is that your Parag Parikh Flexi Cap you should be introducing, which is about 5,000 rupees. So this is an addition. You don't have this currently in your portfolio. ICICI Pro Large and Mid Cap or HDFC Flexi Cap, which is a core part of the portfolio, should be about 5,000 rupees. That also is an addition. HDFC Mid Cap or Kotak Emerging Equity, which is in the mid cap space, you can retain, and that is to the extent of 6,000 rupees. Nippon Small Cap, you can retain, keep it at about 5,000 rupees. Tata Small Cap, also you can retain 5,000 rupees. And quant, you can, it's a little volatile, so you could think of eliminating that completely. If at all you need to keep it to the extent of 1500 rupees. So that is what, you need to be exiting from Motilal Small Cap, which is a slightly weak performance. So you can exit for that, reduce the quant small cap, or bring it down to 1500, or switch to, one of the other small caps that you already have, which are slightly safer. And you can switch Motilal mid cap to HDFC mid-cap opportunities or Kotak emerging equity. So those are the suggestions for the change. Now you have mentioned that your target corpus is about 1.25 crores, so that you will be able to attain it quite comfortably, provided that your target compounded annualized growth rate is about 12%. So if you achieve that for the next 12 years, you will be able to get at least 1.5 crore as your future value, as your target corpus. Your second query is regarding your wife, you're investing in your wife's name. So basically, if you're filing the returns, if you're investing from your income into your wife's mutual fund, then any gains that you are making on this will be clubbed with your income only. So under the clubbing provisions of the Income Tax Act. So there is no, added benefit by, transferring the funds to your wife's name, because when you're filing your returns, it's better that, you have mentioned this and it will be clubbed with your income only. And in the time of redemption or capital gains, you will need to show this as your own, gain. It cannot go on your wife's name. Now, if you are filing the return, then report the capital gains under her folio, but under your income. So that's the ITR2 or ITR3, whichever is applicable. And of course, you have to keep a record of the fund name, the amount, the date of the investment and redemption, and the proof of the transfer, that you have made into her account. And if she is filing her own ITR, then you cannot show the gains, because the gains will be clubbed with your income, and she can have any other income like dividend, salary, etc. Okay, so because of the clubbing provisions, it won't make much difference. And capital gains is anyway has a flat rate of tax, which is long-term capital gains on equity funds which you have invested in, is about 12.5%. So I hope that it's been clear.
I do not have Pankaj on the phone line, but you've covered almost everything in his question. So all the best, Pankaj. Let's take Priyanka's question now. Nisreen, she says that she's 50 years old and wants to invest in mutual fund for 10 years until her retirement. So for that, she needs an advice. She has no target but can invest 2 lakhs per month. So according to her age, where should she invest to create maximum money for her life after retirement? And she's invested only in flats now, and she's new to mutual funds and don't have any idea or know anything about equity. Priyanka, thank you so much for sending us your question. And 2 lakhs per month, I'm not sure you'll be able to just invest till 10 years, or you might just want to continue as well. What's the retirement corpus that you're looking at? You have invested in flats, so I'm assuming that you know certain amount of your retirement backup, or if in case there is any lapse in your income, or if your income is stopping after 60, you have some buffer over there and you have some arrangement done. Now, considering that, Nisreen, how would you like to plan her portfolio? Because we are still not sure whether she needs money from this portfolio after 10 years or not. So, assuming that she's taken care of, in terms of her monthly expenses, if this portfolio is just for her wealth creation post-retirement, she needs to have something in hand. How much will she be able to accumulate 2 lakhs per month for 10 years?
Sure. So, Priyanka, this is a good, opportunity and a good solution for you because you've invested in properties so far. So
Yeah.
definitely, investing in mutual funds would be a good diversification to your
Yeah,
entire
only
basket
when
to your entire basket of investments. So, I could recommend to you the following funds. So typically you can invest in equity funds, which will help you to grow your wealth steadily and also reduce the risk because of the diversification and the following funds. So the equity funds, you can invest, say, about 30,000 rupees in Parak Parik Flexi Cap Fund, which would, have some amount of global and, the rest of it in Indian stocks. You can invest in ICICI Prudential Large and Mid Cap, which is an equity fund. It's a blend between large and mid. That also 30,000 rupees. HDFC Mid Cap Opportunities, which is a mid cap fund, 30,000 rupees. And SBI Focused Equity Fund, which is 30 stocks only. It's a focus fund. You can invest there about 30,000 rupees. Then, in order to make the portfolio a little less risky and, also provide you a bridge between growth and safety, I would like to recommend HDFC Balanced Advantage Fund, which is a dynamic, fund between equity and debt. That also 30,000 rupees, and ICICI Prudential Equity and Debt Fund, which is an aggressive hybrid fund, investing up to 65% in equities and the rest in debt. That also to the tune of 30,000 rupees. Finally, you should have some amount of capital protection and emergency funds also. So for that, I would suggest you Kotak Savings Fund to the tune of about 10,000 rupees, and Axis SDL Target Maturity Fund, which is also a short-term debt fund, 2027-28 for 10,000 rupees. So basically, you will have a nice corpus of short-term funds, also balanced funds, and also equity funds for about 1,20,000 rupees SIP. So your expected return, provided you get about 10 to 11% compounded annualized growth rate for the next 10 years, which is your, tenure of investment, would be in the range of 3.5 to 4 crores. Now, if you want, after retirement, you can also start a systematic withdrawal plan to the tune of about 1.5 or to 2 lakh rupees per month post-retirement. So you have that option also, since your corpus will be quite healthy. But I'm assuming that you already have some properties and you will also be receiving some rental income. So between, all these investments, you can decide which one to use post-retirement for your regular monthly expenses. Very interesting question, Priyanka, and all the best to you.
Let's move on. I have Debayan on the phone line with me from Kolkata. Hi, good evening. How are you doing today?
I'm fine.
Thank you so much for sending us your question. I'm doing good. Thank you so much. So you want to invest 4,000 per month in 5%, increase your SIP also, step it up by 5% every year. And the fund that's on your radar is Nippon India Small Cap Fund. Any specific reason, Debayan, you're looking at this fund?
No, actually, I have the retirement guarantee because I am a government employee, so retirement purpose, that won't be a problem for me. This fund, actually,
Lovely.
I want to create wealth for my son. He's just 6-year-old, and afterwards, for his education, I want to get a little bit of wealth. That's why I am asking this. And small cap, I can give it 10 to 15 years. There will be not an issue. So I am choosing
10 to 15 years. Okay, so you want to
10 to
start
15 years.
10 to 15 years time horizon. You want to start with 4,000. It's for your kids' education, and you will step it up by 5% every year. Perfect. Let's
Yes,
begin
ma'am.
your
Yes,
financial planning for this goal. Nisreen, 4,000. Can we add 2 funds, or you would recommend 1 fund? And if it's 1 fund, is a small cap fund recommended? Although it's a good fund.
So, rightly said, Nippon India Small Cap is a very good small cap fund. But, typically we would not suggest that as your only fund for an SIP, even if you're investing for 10 to 15 years for your son. So, if you have a moderate risk appetite, for example, you can split the 4,000 rupees, say 2,000 rupees in Parag Parikh Flexi Cap Fund, which is a Flexi Cap category, and 2,000 rupees in the Nippon India Small Cap Fund, which is, as you already rightly said, it's a small cap. So that way, your expected corpus in about 20 years, I've done a rough calculation, with a 5% SIP increase, because you mentioned that you can increase by 5% every year, provided you get a 12% compounded annualized growth rate, you would have approximately 40 lakhs in your corpus. Now, you have invested about 15 to 16 lakhs. If you continue to invest 4,000 rupees plus a 5% SIP, so your total would be around in the range of around 40 lakhs. If the markets do better and you get about 13 to 14% compounded annualized growth rate, then you can even reach, between 50 to 55 lakhs. So you can review this very carefully because you're investing for your son, and make sure that, you remain on track and you increase your SIPs also 5% or 10%, whatever works for you. So all the very best to you, Debayan.
Debayan, anything else you want to ask Nisreen?
No, ma'am. Thank you very much for your cooperation. I'll try to
Okay, all
follow
the
the
best.
suggestion. Okay, ma'am. Thank you. Have a
Definitely.
good
Thank
day.
you so much. You too. Okay, on that note, let's take a quick break. I have Nisreen with me who will also answer our viewer queries post the break. But then for all our viewers, let me just flash you our WhatsApp number, email ID where you can send across your questions.